Hello there, welcome to the Real FX YouTube channel. If you are new to the channel, welcome to the family and don't forget to subscribe. Hit the notification bell icon so that YouTube will notify you when we post another video, and stay tuned for more videos on this channel. Okay guys, so let's get straight into this video. In this video we're gonna be talking about fake order blocks. So many people, when they are trading, they tend to spot these huge amounts of order blocks, and then they tend to be confused on which order block to use, which one you shouldn't use. Now on this video we're gonna be filtering most of the order blocks that do not work, guys, because let's face it, most of the order blocks in SMC, or that an SMC trader can tend to spot, most of them do not work. Most of the order blocks are there in the market to induce you to take a trade. Now in this video we're gonna be filtering out some of these order blocks. Now the first part about that we're gonna be talking about in this order block is knowing the premium area and the discount area. Now when we have a premium area and a discount area, this is when you should know that we only buy in the discount area, and then we only sell in the premium area. So this is what I'm talking about. Let me take out my Fibonacci first. Let me draw a leg. So here we have a leg, and then as you can see here, we're in an uptrend, and then this is the high, and this is the low and the high of our impulse. This is the current impulsive move that we have. Now we only buy in the premium, we only buy in the discount area. So this area over here, this is going to be the discount. Let me show you. This area here below the 50% is gonna be the discount area. This area here is gonna be the discount area, and we only buy in the discount area. So most of the order blocks which are in a discount area, where if we use them to buy, they tend to hold the most. And then most of the order blocks in the premium area tend to fail a lot because they will be used as liquidity. So this is what normally happens. And then beginners traders tend to fall into this trap. So what happens is the market will push to the upside, and then it will start doing something like this, moving to the downside, and then the market will react to maybe an order block here. Let's say we have an order block here, and people will be like, okay, the market has now returned to our order block. Now let's take a trade from that order block, and the market will start pushing to the upside for a little bit just to get them excited, and then violate their stop loss. And people will be like, SMC is no longer working. SMC does work, guys. You just have to know the right things and have the right strategy. So order blocks in this premium area will never hold. They tend to fail the most because they're gonna be used as liquidity so that the market can be able to have impulsive moves. Remember, for the market to move impulsively, we need fuel, and this fuel comes from the mitigation of those orders that people have put in the wrong order blocks. So when the market mitigates their order blocks, it tends to come to a significant order block, which is maybe somewhere around here, and then the market moves towards that order block, and then the market will then start pushing to the upside. The market will start pushing to the upside. Now the second thing is that the same applies to, let's talk about a downward trend. Now let's say the market is moving to the downside like this, and then you are looking to sell. You only sell in the premium area. You only sell in the premium area. So we take our Fibonacci from top to bottom, as you can see, and then this is our 50% level, and then this is where we'd expect to see our significant order blocks in this zone here. So we only take a trade if the market enters into this zone here. So what can happen is that the market can do something like this, can leave order blocks here just to induce inexperienced traders to take trades. So the market can the market can leave very insignificant order blocks as it pushes to the upside somewhere around here, and then these order blocks will induce new traders to believe that the market wants to take a turn back into the right direction, and this, guys, is wrong. When the market pushes to this order block here, most of the time it's because the market wants to generate liquidity, preparing itself to tap into a significant order block and then push to the downside. So in this discount area, when it's a downward trend, the only thing you could look for is to take a trade here that's going to allow you to buy when the market reaches here. So here you can only buy to sell. So buying to sell is taking a short-term trade so that you can follow the right direction. So that is buying to sell. So we take as a short buy here. We take a short-term buy so that when the market reaches our significant area, we can take a sell. Now, the second thing that I want to talk about, guys, when it comes to the significant order blocks is QMLs, guys. QMLs are very important. QMLs are very important. And I did make a video about QMLs. If you don't know what a QML is, go and check it out. It's there in my previous videos, and I'm also going to link it in the description. And there's going to also be a link here at the top right corner, so you can just click on it and then go to the video. Now, here's what a QML is. Let's make an example. We're in an uptrend like this. We're in an uptrend like that, and then the market starts to return to our it starts to return to our discounted area. Now, when it reaches our discounted area, it is very important that we know the zone we want to trade from. So when it reaches our discount area like that, we should see an order block that is associated, remember guys, listen carefully, that is associated with a QML. So a QML, when the market is returning to the downside, it's going to be making smaller structure like this, smaller structure like this, smaller structure like this, guys, and then again small structure like this all the way to the top. So a QML, guys, this is a QML. This low here that got taken out, this here would be the QML. So this here would be the QML. So when we mark our order block, it should be an order block that is associated or near these QML. So we tend to put, where do we put our this is how we highlight our trading point. So we know when the market reaches here, we want to take a trade. So the market will come, create some liquidity here. As you can see, it's taking liquidity, as you can see, relatively equal highs. Sometimes it creates a trend line so that it can induce trend line traders to take a trade, and then the market will come, and then the market will tap into our order block and then start pushing to the upside like that. And the same thing applies to a sell model. Now the sell model is gonna be better to the downside, and then when the market starts retracing, we mark the high and the low of the previous impulse, and this will be the high and the low of the previous impulse, and then we make sure that we find a significant order block within this premium area. Since we are selling, we are looking for something in the premium area. So if we have an order block here, this is the order block that we are looking to trade off from. And then another thing that we do is we look for the QML, guys. The QML is very important. At Real FX, we really take the QML very serious. So we push the QML. We're gonna be seeing some minor structures like this on this leg. We're gonna be seeing something like that, and then the market will tend to move like this. So when the market is moving like that, obviously we can spot our QML. Our QML will be here. This is a Quasimodo level. That is where our QML is. So if we were to mark the zone that we're going to be trading from, we will be marking this zone here, this area here. So stay tuned, watch the video till the end. We're gonna be diving into some real charts, and I'm gonna be showing you how you apply these things to maximize your profit. So this is our trading area. So we expect to see the market push into this area. As it pushes into this area, the market must create some sort of liquidity. So liquidity gives us an extra confirmation that we are going to be pushing to the downside. So what most of the people would do is to enter aggressively here. Most of the people would enter aggressively here, but at real FX we prefer, most of the time we prefer to see a minor change of character in this area here. I'm going to mark out the area. In this area here, we prefer to see a minor change of character, and then a confirmation entry, a minor change of character as the market touches into the order block, a push to the downside, and then a tap into our QML, a minor QML, and then a push to the downside, something like that, a push to the downside. Sometimes the market doesn't return to our minor QML, but it's very important to take safe trades, as this will maximize your profits and minimize your losses. Now we are going to dive into some real charts, and we're going to be applying exactly what we talked about here. Let's quickly look at this New Zealand dollar and try to spot whatever that we're talking about. So as you can see here, we had a push to the upside. We have an order block here. As you can see, this order block was violated. It was used as liquidity. Now we have that as liquidity here, and then we also have, as you can see, we had a high, a low, a high, and then a low, and then we had this impulsive move to the upside, and then we had again this low here. So this trade, as you can see, it reacted on this order block. So if we were to take this and mark the high and the low, as you can see, our order block is within the discounted area, so we can safely buy from this order block here. We can safely buy from that order block, but I wouldn't have taken the trade because I don't see QML. I can't properly see QML here, guys. But let's look at the next trade. So where is the low, where is the leg? So this is the high and this will be the low. So where is our QML here? This is a perfect one. This one, guys, I would have taken. This one I would have taken, and I'm gonna show you the one that I did take. This one I did miss it, but I would have taken this one. And then if you check on the videos that I've done in the past 3 days, this move here was predicted before it happened, but we'll talk about that later. Now let's talk about this one here. This one I would have taken, because where is our QML? Here is our QML. Look, a tap into our QML. Where is the order block that is associated with that QML? Here is that order block. This order block here is associated with the QML. Now put our entry here, stop loss, take profit. You are fine. You will win this trade. Now let's look at the next setup. On the next setup, where is the QML? The QML is here. We mark the QML. The QML is very important, guys. That's the QML there. As you can see, tap into the QML. Super sniper entry, almost no drawdown, guys. We almost didn't face any drawdown in this trade. And then where is the order block? The order block is here. That would have been the order block. That would have been the order block. That would have been the order block. This could have been a very nice trade, guys. Where is the liquidity? The liquidity is very important in this trade here. Where is the liquidity? The liquidity is here. And in this one, where is the liquidity? As you can see, the liquidity, we did have some liquidity here. And then we also have this relatively equal highs here, acting as a form of liquidity, and the market did tap into our order block. Now we expect the market to take out this high. Now even if this trade goes against my way, I know that I have already broke even in my trade, so I'm I'm not fearing anything when it comes to this trade because I am risk free on this trade. Now I'm just waiting to see what the market does. Now, thank you for watching this video, guys. If you made it till the end, don't forget to give us a thumbs up if you did enjoy the video, and don't forget to subscribe if you are new to the channel, and hit that notification bell icon so that YouTube will notify you when we post another video.